Well, the stock of Matrimony.com is up close to around 2x in the last 1 year, but since July, the stock is down nearly around 9 to 10% in trade. And Matrimony management did have an analyst meet wherein they did discuss expansion plans as well as the uptick in terms of their subscriptions. In fact, during Q1 they did post fairly good results. The billing growth was at 29% and the revenues grew close to around 22%. They posted a net profit of nearly around 14 crore with a strong free cash flow generation, making the cash balance as high as over 300 crore. The EBITDA margin for the matchmaking business has also improved to 27.7%, and the paid subscriptions stood at 0.22 million, which is a growth of close to around 32% YOY. We at ET Now caught up with the founder and CEO of Matrimony.com, who is Mr. Murugavel Janakiraman, to understand the future outlook. Management stated that the business has been doing well. The EBITDA margin for the matchmaking business has improved to 27.7%, and they do expect the EBITDA margin to reach 30% over the next few quarters. And one of the reasons is that the entire business has high operating leverage, and despite the marketing expenses being high during the quarter, there are good legs in terms of the good levers in terms of further improvement in the EBITDA margins. They had to incur more marketing expenses on account of the competitive scenario, but they still believe that there is potential for the margins to improve to as high to 30% over the next 3 quarters. This is in the matchmaking business. Management also stated that they have seen good amount of billing growth during the quarter and also increase in paid subscription, and they expect the business momentum to continue. There was a recent acquisition of Shadi Saga, and that acquisition is likely to help them achieve 60,000 to 80,000 listings, and it will make them the largest player in the space of matchmaking services. They also expect Mandap.com and WeddingSaga.com, which have been their recent launches, doing well, and also they expect that the wedding services business, although it is relatively at a small scale right now, that could probably grow in double digits. In fact, management also stated that yes, there was some amount of growth challenges recently on account of COVID, although people really did not get married during the COVID period, but matchmaking business has been relatively unimpacted or insulated from the recent recession. They are seeing growth to come back. They're setting up operations in Bangladesh, Sri Lanka, and they're also looking to expand further in South Asian countries. They also continue to look at expansion opportunities within India itself, and also they're open to more inorganic opportunities in the matchmaking space. And besides, overall, they as of now do not have any immediate plans for any inorganic growth, but yes, they are fairly open to the same. And overall, yes, management is fairly positive in terms of the growth momentum.